Welcome to CMC's Market Update video for Thursday the 29th of May. I'm Rick Spooner. Pretty interesting session in international markets over the last 24 hours. Not much of it centred on equity markets really. We saw a bit of a softer lead from the US, and our market here in Australia hasn't been helped by further weakness in the iron ore price yesterday. Our market's also now very much in wait and see mode, waiting for what might be quite a potential significant number in the form of the private capital expenditure numbers due for release here at 11:30. And they certainly could impact not only the stock market but the Aussie dollar. Probably the main centre of attention though for international markets was US dollar strength. Quite a few currencies weaker against it, one of which was the Eurodollar. That wasn't helped by an increase in unemployment numbers in Germany, and also by bank lending data, which remains very soft. In the year to April, total bank lending actually declined 1.8% over the previous year. So we're seeing quite a bit of a few of the setups that we've canvassed in recent days and weeks in this update video being triggered. Now we saw the Euro US make a pretty conclusive move again under the 200-day moving average last night. We saw the pound decline and fall through the trendline support and 55-day moving average that we looked at. Also saw the Euro CAD get under the longer-term trendline support that we'd featured a few days ago as well. Just scanning the currency charts against the US dollar, one of the charts that looks pretty interestingly placed to me at the moment is the Kiwi against the US dollar. And so I thought that would be the chart I might feature in today's update. Just for some background there, as I'm sure most viewers are aware, the New Zealand Reserve Bank has actually increased its rates a couple of times in recent months, but that's left it out on a limb a little bit against the sort of pantheon, if you like, of other developed nation central banks, none of which are looking at all like moving in the near future to any sort of a rate increase, and that had certainly led to quite a bit of Kiwi dollar strength, and which got to the stage where we actually saw the New Zealand Reserve Bank Governor jawboning the Kiwi down over the last week or so. But we've also had a bit of softer data in recent times. We saw quite a significant drop in home sales a couple of weeks ago in response to the stronger house prices. Yesterday we saw Fonterra reducing its farmgate milk prices in response in part to the lower international dairy prices and auction prices we've seen in recent times. And we also saw a surprisingly large drop yesterday in a business confidence indicator in New Zealand. So all that's conspiring to sort of at the moment anyway, make the Kiwi one of the weaker looking currencies against the US dollar that is showing signs of strengthening. To focus in on a daily chart then of the New Zealand against the Kiwi, we've got this quite clear support across here, and we saw a decent break under it last night. Now, depending on what your trading strategy is, that break, looks significant enough and has gone far enough to suggest at least the possibility that this may be more than just a false break, although of course one can never tell. Just looking at before I go on to look at how far this might go, possible sort of stop loss levels for people who are short in this trade. One way to handle this is often to look for a level of resistance sort of back in the body of the pattern. Now, in other words, not right up over the top of the peaks, but something a little bit more aggressive. And what I've noticed here is that you've got this sort of level here with this dashed line, which you've got a minor trough here, another minor peak over here, and just a general area where daily candles have stopped in that broad zone. And to my eye as well, the potential significance of that level is enhanced by the fact that the 55-day moving average I've got here coincides at that level. So that would be one way of thinking about stops, to have them just parked a little, just behind that 86.05 area of resistance at the moment. Turning to the potential here, just to get a bigger scope on things, I'm looking here at the weekly chart just to begin with. One of the things that interests me about this whole situation at the moment is that the momentum oscillators like the daily stochastic, weekly stochastic I've got here is now trending down quite sharply, having dropped out of the overbought zone. So that often indicates potential over the medium term, not all at once, but for something which will see this downside momentum continue, perhaps right down as far as taking the stochastic back into its oversold zone or somewhere near to that kind of level. Then in the broader, very broad picture of the Kiwi, we can see this sort of trend channel type setup here. It does have the overall look as though it might still be on the way back up towards the top of this, but in the meantime, scope for perhaps a fairly significant correction. And one thing that attracts my attention at the moment anyway is this potential trend line I've got across these two troughs here, and as with that other resistance I looked at, the fact that we've got a moving average very close to that, in this case the 40-week moving average, which is more or less the same sort of thing as the 200-day moving average, now tracking fairly close to that trend line, so making that sort of area around the 83 cents or low 8300s an area of potential significance. Now, you know, if we get that, would be a possible sort of objective area. Some traders would operate on the basis they may not actually take profit if we got there, but certainly tighten the stops up to defend against a bounce off that level. But of course, if it breaks through and keeps going, well, so much the better. And indeed, most or a lot of trading strategies would also on the way down have strategies for moving the stop down over time if the Kiwi does in fact fall away from current levels. Thanks for listening in. I'll be back tomorrow with another market update video.